Welcome to the Dental Business Guide podcast. From money to marketing to management, this podcast will help you run a better dental business.
Right. Good evening, everybody. I'm Arun here, and welcome to this webinar. Firstly, I hope everybody is well. It's a cold and damp early March Thursday evening. I think we don't usually do a webinar on Thursdays, but one's tonight. Okay. So tonight I'm going to be talking to you about the budget that was released yesterday and the implications it has on dentists. But before I crack on, I've got to warn you, I've got two kids in the next room who are just literally about to play Minecraft with their friends online, so they might make some noise. And I've got my dog here who wants me to take her for a walk, but I'm trying to hold off. So she might come back and start bark at me. So if she does, I might have to have her in my lap. So apologies, because there's no one else around to take her for a walk. But we will see. She's waiting for my wife to come home to take her out, but she's not back home from work yet. So anyway, without further ado, the budget update 2021. Now, this was Rishi Sunak's second budget, I believe, from memory, and what a budget it was. Okay, considering this circumstances that we're all in. Okay, in a nutshell, it was no surprise that he has to, and it is no surprise that he does need to get some money back into the pot. So let's crack on. So before we do, for those who don't know me, my name's Arun. Arun Mehra. I'm a chartered accountant. I'm the owner and CEO of Samera Business Advisors. What does Samera do? We are accountants and tax advisors. We are commercial finance brokers. So for anyone looking to raise finance, we can help people buy practices, asset finance, all that type of stuff. We also are dental practice sales brokers. So we help people buy and sell practices. And finally, just very recently, we're providing digital marketing services for dentists. So people opening practices, running practices, all the digital marketing side of things. We've got tons and tons of experience of doing that because we've done that for our own dental practices, including the ones I say below, which are the Neemtree Dental Group, which is based down here in London and Surrey. I've been working with dentists for around 17 years. I'm married to a dentist. And we literally have hundreds upon hundreds of dental clients across the country. Associates, practice owners, corporates, you name it. We've got all shapes and sizes. I'm a trained chartered accountant with PwC. Seems like a long time ago, but yes, those were the good old days. And I'm an ex-vice president of Bank of America in a former life prior to coming into the dental industry. And how did I get into dentistry? Basically, I married a dentist and I thought, okay, there's an opportunity and a business angle that I could pursue. So here I am today, 17 years later, and I'm still doing what I love doing, sharing ideas, sharing knowledge online, and then also helping clients. Now, fortunately, it's just not me, okay? I have quite an extensive team now of accountants, commercial finance people, bookkeepers, tax advisors, digital marketing experts, admin people to help clients. But it started with me on a dining table many years ago, and here we are today. So let's crack on with what happened in the budget before we do that. So let's move on. So some of the key facts that may have been mooted last night or yesterday. In a nutshell, as a result of COVID, the economy shrunk in 2020 by 9.9%. That's the largest annual fall in over 300 years. I think prior to the pandemic happening, I think if you recall, I think things were going well. I remember my businesses, our businesses, I remember clients' businesses, everything was going pretty good, pretty hunky-dory. And then obviously, slam, bang, bang, in the middle, COVID struck. Now, the total support given by the government thus far has been £407 billion. That's an sizable amount of money, the largest amount on record. And we're expecting that, or they're expecting the government borrowing will reach 16.9% of gross domestic product, the highest level on peacetime record, borrowing on record. And it's not going to be until kind of quarter 2 2022 that they're expecting the GDP to be back to pre-COVID-19 levels. We will wait and see. Unemployment is over at 5%, the worst rate since 2015. And we've got now 8.9 million people whose jobs have been furloughed, which is a lot of people furloughed. So those are some of the stats or the situation that we're in at the moment. So let's start off with some of the things that Rishi Sunak mentioned yesterday. And I'm going to try and keep this webinar relatively brief. It'll be done in the next 20, 25 minutes, probably at tops, okay? But if you've got questions at the end, please do ask and fire away at the end or drop me an email afterwards. I'll send my details later. So as we know, furlough has been extended. The scheme will continue to pay 80% of employees' wages for the hours they can't work through to June 2021. The change happens then in July, when employers need to contribute 10% of the cost of the scheme. And then from August and September, this will increase to 20%. The scheme is now set to end the end of 30 September 2021. Now, we all know this is a moving target. We're all hoping that all lockdown rules, etc., will end in June. And I assume the government has based this furlough extension based on that. You never know. If things don't go to plan, this may be pushed back further, but we shall see. I imagine the government's at a point where they probably can't go beyond that from an affordability point of view, but we will wait and see. Now, separately, for those of you who are self-employed, this has also been extended and to the 30th of September, and there'll be a fourth grant and a fifth grant available for those of you who managed to get this grant in the previous year. The fourth grant covers a period of Feb 21 to April 21, and that's worth 80% of the business's average trading profits. And the fifth and final grant will be from May 2021, and this will target support towards those affected by the pandemic. Now, this is the important thing here. The grant will be extended to cover those who started as self-employed in 1920 and who were excluded from previous claims, which means an additional 600,000 individuals will be eligible. So if you didn't qualify last year, okay, during this period, you may well qualify this year. So the key here will be to, for two things, is to get your tax return done as soon as possible, because then you can work out what your trading profits are. And then from those trading profits, you'll be able to determine how much you may be able to claim from the grant. And so it's really important to get these done on time. I have my little friend here, Teddy, who is wanting to say hello, Teddy, to everyone. We're talking tax. Yes, I know. Let her have a lick and then she can settle down. Okay, sorry. So the key here for those of you who didn't manage to claim this last year is firstly to get their tax returns done quickly, and for those of you who did get this last year also is the sooner you get your tax return done, then the sooner you can make your claims, which can commence in in around April time. Okay, so April-May time. Okay, so it's important that you do this and get organised, because I know clients of ours who have managed to get this size extension. I think they've had I think it was 3 of them so far. So this is something that they're extending alongside the furlough, as I mentioned earlier. Now this is the big beast of a change, okay? And this affects people who are running a company, okay? And this is the thing that Rishi Sunak really kind of went to town on yesterday in terms of tax, and it's a change in the corporation tax and ultimately an increase. So currently, corporation tax is a flat rate of 19%, but this is going to rise. Thank you. I've got a message here. Unconditional love of my pets. So yeah, she says hello as well. Thank you. That's very kind. She's a handful, to be honest with you. But she's lovely. Let me go back to the slide. Now, Teddy, let me talk about corporation tax. Now, corporation tax, as I said, was 19%. Now, this is rising to 25% from April 2023. Now, let me get this right so you can see Teddy. You probably don't want to see me, do you? You want to see Teddy. Now, what will happen, though, up until 2023, we've still got the 19% corporation tax rate. But after that, and anything below, so that's it. Any company earning profits below 50,000 per annum will still just pay 19%. And for those between £50,001 to £250,000, will have a tapered increase. It's when you reach that £250,000 level, if you reach that level, which is a healthy profit, you'll be taxed at a rate of 25%. Rishi Sunak was saying that it will only affect 10% of companies across the UK getting that 25%. I'm not so sure. I think there'll be more companies that will be affected by this. Now, I know a lot of people over the years have turned their businesses into companies, and now they're probably thinking, well, now is that the right thing to have done? Maybe I should be going back the other way. And so all of these things need to be explored to see if it's the right thing for you to be in a company and what's the best tax options for you. Okay, if you're looking at that, or if you're considering incorporation, it still may be the right thing for you to do, as it offers limited liability and various other benefits as well. Now, so that's one important factor, the corporation tax increase. One of the other things that was announced also, which hasn't been available before, for the periods between April 2020 to March 2022, there's an increased amount available for 3 years carryback of corporation tax losses. So what that means is during the pandemic period, companies may be making some losses. Those losses can be carried back to previous years where you may have been making some healthy profits. Okay. This ultimately enables you to offset some of those losses and ultimately get a cash rebate back from HMRC. So that's kind of an exciting or a positive thing that's come out of this. If you are making losses this year during these periods between April 20 and March 2022, you can carry back those losses to previously profitable years and hopefully get a rebate back. So that's one positive thing, I guess. Then on another front, and this is really have been created by Rishi Sunak to encourage investment, and he kind of went to town on this in the budget yesterday when he was talking about it. And what they're offering is between April 2021, so from April to March 2023, companies that invest in qualifying new plant and machinery assets, and the key word is new, it can't be secondhand, will be able to claim 130% super deduction on qualifying plant and machinery. So what does that actually mean? So the first thing is, if you're going to buy any equipment, don't buy it now, buy it from April. And then secondly, let's say you bought a piece of equipment for £10,000, okay, it can qualify for £13,000 as a deduction in ultimately your tax return. So in that first year, okay, which is an attractive reason to buy equipment because it can reduce your tax bill. And the reason why the government are trying to do this, they're trying to encourage trade, trying to encourage activity, trying to encourage things to happen. Now, in addition, there's also a 50% on certain qualifying special assets such as air conditioning and lighting to kit out premises. And again, that can be claimed in the first year as well. 50% of that can be claimed in the first year. So what they're trying to do ultimately is encourage businesses, small, big, large, okay, to go out and spend, buy assets, get some tax rebates, which will then hopefully stimulate the economy. A smart kind of move, but people will still be cagey whether they want to spend that money yet. I think people have to be, or companies have to feel they're confident that we're not going to go down to another lockdown, because the last thing you want to do is buy more assets and then go into a lockdown and then be committed to paying these assets, even though you're getting a tax rebate. It's still a pain. There's still pain. There's still a worrisome situation. So ultimately, the super deduction, as they're calling it, can give up to an additional corporation tax relief of 25 pence per pound spent on investment. So it's an attractive thing. And if you're thinking of investing, thinking of kitting out, buying equipment, all of that type of stuff, don't buy it yet. Certainly don't buy it yet. Wait just a month. Okay, don't commit. And if you've got any orders out there, wait till April 21 and then place the order. Now, this is kind of off track now. These are just a few other points which aren't really relevant to dentists, but I just thought I'd highlight these today. As I said, I'm going to keep this relatively brief. There are some grants available. So non-essential shops will be opening in April, and there's a grant available for those. So if you know people who are in retail, that could be applicable to them. Any businesses that have to account open until June, there's another grant available up to 18,000. Now, I know this doesn't really affect dentists on the whole, but it's just a point to note. Now, the size of the grant is ultimately linked to the rateable value of the premises. So we shall see if that's applicable. It's not really applicable for dentists, but I just thought I'd throw it in there because these are some of the key points from the budget. One of the other things is from April 21 to December 21, there's something called the Recovery Loan Scheme, which gives access to additional funding from £25,000 to £10 million. It's in the form of overdrafts, loans, invoice finance facilities. Now, the government will guarantee 80% of the debt, and no personal guarantees will be sought in any facility under 250. So it's just another form of the government offering these types of loans. Now, if you're trying to raise finance at the moment, it's not the easiest thing to do at the moment, because I think a lot of the banks have given all their money out through bounce back loans and CBILS, and so they're a bit weary about lending money. They're doing it, but albeit in a slower manner and a more careful manner. But again, if you need funding for your business, for expansion, for whatever it may be, my colleagues Nigel, Dan, and others in the team are 100% there to help us. So just reach out to us. We have that commercial finance team, which I think is second to none in the sector. So if you need help, get in touch there. Now, for those of you thinking of buying a house or on the verge of buying a house, the temporary nil band rate, which was supposed to end on the 31st of March, now that's been extended to the 30th of June 2021. Now, there was lots of talk that the housing market's going to crash after that point. So I guess the government's just delayed that maybe by 3 months. Maybe they have, maybe they haven't. Maybe it's not going to crash. But this has been done to enable ongoing transactions to complete, and for those who want to be able to take advantage of the relief. In addition, as a further assistance to the housing market, the nil rate bound will be 250,000 until September, before reverting to 125,000 on the 1st of October. So if you want to buy a house or flat or something up to the 250 level, there's no stamp duty up to 250 until September, end of September. After that, it reverts back to 125. So if you're looking to buy a house and it's in that range, you could save yourself quite a lot of money, if you're going down this route and wanting to buy a house, if you can do it before June, ideally, In terms of allowances and tax rates, good old Rishi, he's pretty much fixed the tax allowances for the next 4 years. Apparently he's not changing this. The personal allowance is at 12,570, higher rate band at 5270, and the additional rate will continue at 150. So anything above 150 will be the higher rate tax rate, or the highest rate tax rate is above 150,000. Again, this is a kind of, one of those things. So let's see. Let me move on. There's a few questions coming. I will come back to you on these questions. So actually, I'll just finish these slides and I'll come back to the questions. So this is, there's a future fund breakthrough. Again, this is probably, not relevant to dentists, but I'm just highlighting some of the key facts. There's a fund available for people who want to invest in the high-tech sector. Interestingly, that he's trying to encourage money to go into the high-tech sector. Therefore, the government's trying to support that. If you're trying to raise large numbers here of up to at least £20 million, then there might be some tax breaks available for you. So that's just something there. The free ports was something that was announced yesterday. Basically, a policy to bring investment, trade, and most importantly, jobs to areas that perhaps don't have as many jobs. Free ports, a place to carry out business inside a country's border, but where different custom rules apply. Places include East Midlands, Liverpool City region, parts of the Thames, Plymouth, South Devon, Humber, Teesside. You can read these. You can read more about it online. Funding for the culture recovery. One thing that I found quite particularly interesting, the government's also pledging 2.8 million of new cash to back the UK and Ireland's bid to host the World Cup in 2030, with a £25 million new funding announced alongside to help grassroots football. So they're trying to stimulate things, okay? But ultimately, the bottom line, the government's broke, okay, and they're struggling to pay for this now, so they're going to have to make that money back. Now, one of the things that was perhaps anticipated was a change in capital gains tax, but nothing was announced yesterday. So the opportunity to sell your dental practice, if you're looking to sell, is still there. Entrepreneurs relief is still available. Now, in saying that, there is a review, I believe, a tax review in the next few weeks, 2 or 3 weeks, I believe. So something could be announced at that stage. In addition, there'll be something perhaps in the autumn they were talking about reviewing and giving out more information on their tax reviews. Now, if you're thinking of selling your practice, remember, if you're selling this, to sell a business, it takes at least 6 months in this current environment, with funders and CQC and all these types of things. So the government ultimately needs to think, okay, how can it raise money? And the main thing really here from this whole budget was he cited and he said that the average man or the average person will still get the same take-home pay with this budget, but ultimately he's delaying the corporate changes for a few years. He's tried to stimulate companies by getting to invest and buy equipment, buy assets, buy all that type of stuff. But then at the same time, further down the line, they'll be taxed at a higher rate when hopefully those businesses are doing better once we've come out of this deep glut. Right. So, question here is, first question is, in terms of the, in terms of this super deduction, right, yeah, one point to highlight, it's for limited companies only, okay? So it's not relevant to a sole trader or a partnership or a limited liability partnership. It's only for a limited company, okay? Then an example, right, in terms of the detail of the legislation, we haven't actually seen that. We've only seen the draft legislation as yet. So I'd love to give it an example, okay, of what the saving would be. Let me give, if I can give it an example, which I think is how it's going to work, but it's not clear, so don't hold me to it. If you've got a tax bill of £20,000, okay, and if you've got profits of £20,000, okay, then at the same time you buy a piece of kit which qualifies for this plant and machinery. And let's say that's £10,000, okay. That then using that super deduction, that takes it up to £13,000. So that 20 less the 13 gives you 7, and it'll be that 7 that you'll be paying the tax on. Okay. Now that's the very basics of it. Until I see the detail in the legislation, I wouldn't know, and until the computations are prepared, we won't know for sure. But that's the outline idea behind it. Okay, so I've been talking 25 minutes. So, right. So, any further questions on this before I wrap up? So I know tax. I can't talk more than 30 minutes on tax. I think I'll put myself to sleep, and I'll probably put Teddy to sleep, and I'll put all of you to sleep. So, it's in summary, the budget was, I suppose, a very much a something that has to be done. We're all aware of it. Sadly, money doesn't grow on trees. The government will have to fund everything it needs, and that's ultimately going to come through taxes. Okay, it's going to be delayed, and they're going to try and encourage companies to stimulate the economy by growing and investing, and ultimately, hopefully, taking people on for jobs. But time will tell. Time will tell. Right, time to wrap it up, I think. Okay, there's actually another question. Does this budget have any perks for a practice buyer? Well, I wouldn't say there's any perks, but ultimately, if you're buying a practice and it needs a refurb, you could then use that money to, obviously you'll need to raise the money, and then you could get some, if the practice is highly profitable, or it's quite profitable, you can then use those deductions, the super deductions, as we talked about earlier, to reduce the tax liability you might have. Now, remember, if you're buying a business or buying a practice, in a nutshell, it might be best for you to be doing in a limited company in the short term because of these super deductions. So acquisitions going forward, in my gut, is telling me it'd be better if if the practice needs investment, to put it into a company. Obviously, the direct tax rate for corporation tax has gone up to 25% from 2023. That's inevitability. But if you had kept the practice in your own name as a sole trader or in a partnership, you'll still be paying rates at the 45% at the higher rates. So the company, despite all the problems, it's probably a better option. In addition, one of the things that I haven't mentioned here, in the company 25% tax thing, if people are a part of a group, that £250,000 limit would be split around the group. So if there's 3 entities, 250 will be divided by 3. So anything above that 250 divided by 3 per entity will be taxed at the 25%. So yeah, it's taking the whole tax regime, corporate tax regime, back to 2014 when we had different tiered tax structures. So that's back 8-9 years now, and so he's gone back to that. But at that time, the taxable limit was 1.5 million, which is considerably different to the £250,000 that we're seeing now. So it's not the same, and it's a tougher buy. But he's tried to sweeten the deal ultimately by these super deductions and further annual investment. I think the annual investment allowance has gone up to 1 million as well, which I haven't mentioned here, which is on the which would benefit sole traders or those types of people, sole traders and LLPs and partnerships. Let's see, we've got a few. So the question is, if a practice is sold on a lease basis, but the freehold is sold 50% to a person to add to his SIP, in a nutshell, you would get an entrepreneur's relief. Obviously, we need to look at the details, but in a nutshell, if you're selling a business, okay, you will qualify for entrepreneur's relief, even if you're selling it to a SIP, okay, because it's ultimately a sale of a business. Another question we've got, the 4th and 5th grant. Okay, the grants relate to the SICE, self-employed. I can't remember. It's basically a grant for self-employed individuals. So last year you could have got grants for 3 periods, 1, 2, and 3 grants you would have got available if you're self-employed and you qualified. The 4th and 5th grants now allow you to get some further grants if you're self-employed. You need to have trading profits, and therefore, if you didn't have trading profits last year, you wouldn't have got those grants. But now, because you might have just started, but if you have trading profits now in this tax year, that's why I said you have to submit your tax return in as soon as possible. And then you can then see if you'll qualify or not. And then from that, you can then qualify for the grant. And the grant can be up to 80% of your trading profits that you've earned. So as you can see, it's this is dry enough to put the dog to sleep, but it's important as well. And especially in this environment where I think it's going to be a challenging environment out there. But if you need, there are ways to save tax. There are ways to manage your money better. It's just about planning, organizing, and doing things better, which can be done. Let me move on. So just to wrap up, I don't know if you know this, but we deal with over 600 dentist accounts and tax returns across the UK. So we're probably one of the biggest out there. We do a lot of tax returns and accounts and you name it, for practices, associates, companies, you name it. So we do a hell of a lot of that. We have a great team to support that. Let's move on. If you need any help, this is particularly aimed at associates. We have an event actually this Saturday, Associate Dentists, How to Save Tax the Right Way. The link is here. I will share that link actually, if I can do it, if it lets me do it. So in the chat. Now, this event is aimed at dental associates specifically, okay, for people who want to understand their taxes better, manage their taxes better, and ultimately save tax the right way. Now, I've seen, sadly, I've been doing this almost 17, 18 years. People do silly things sometimes, which then gets them into trouble. So it's important that you understand how you manage your taxes, how you manage your tax returns, how you manage your accounts, and then ultimately how you can save tax the right way. Now, we are in a changing tax environment, and it's important to manage your affairs properly. Okay, let's keep moving on. Sorry, Teddy. Yeah, I knew this question would come up. I'll just answer this question. Is it better to be self-employed or a limited company? Yeah, good question. I think in your early days, it still might be better to be self-employed. Now, there's talk of something called IR35 coming in, which is coming in this year, actually. It's aimed at large corporations first, but it will ultimately impact smaller businesses as well. So it might not be better to be a limited company, but there's no right or wrong answer here. Okay, this has to be done on a case-by-case basis. I prefer the company route generally, but obviously it has to be set up right, managed right, and done right. And there's no right or wrong answer. I think you have to look at each individual situation, and then an answer could be provided to you. Okay. Then let me go back to my slides. So I've sent you a link to that. If you're interested, it's just 39 quid. And it's from, I think, about 9 till about 11ish. And you can read all about it on that link. We also do a whole range of tax planning on all the main taxes of income tax, capital gains tax, inheritance tax, just to name a few. We've been doing quite a lot of corporate tax planning as well lately as well. So I think Teddy wants to go. Hold on. She lost her growl. Oh dear. She's a handful. So we can help you with tax planning. If you are thinking about getting a new accountant, we have Teddy, who won't do your books, and we have Darcy in the team as well, who's our other dog, who won't do your books. We have other accountants, Ashwarya, Nathan, you name it, Adele, you name it, in the team that can help you with your accounts. But if you need any help, we'd be delighted to help you. There's plenty of information on our website in that respect. And then ultimately, if you want to get in touch, or if you've got any questions about anything, the best way, to be honest with you, drop me an email. Alternatively, just book a link on Calendly, okay? And I'll send you that link here now. Let's get this right so I can make it work. No, it hasn't worked, has it? So if you book on samera.co.uk, the homepage, and I'll just share a different page. You can see on here, this is our homepage of the website. You see book a virtual consult. Click it again. You can book a call with myself for accountancy services, or Nathan for accountancy services. We've got Dan on there. We've got Nigel on there around finance. So you can talk to any of us guys, but we have calls all throughout the day, but also evenings and weekends if need be. So we can certainly help there as well. Okay, so we'd be delighted to help. And whilst I've got it here, I will show you. This is the Dental Associates event we've got this Saturday, so this could be of interest as well. Why pay more tax when you need to? So check that out. That's on a different page at sameradental.com. You'll see that there on the links, all in the chat. And then finally, if I go back to my slides. In a nutshell, I think the government does need to recover what it has spent. Okay, the tax environment is getting more complicated. I think this budget has made it more complicated for sure, with these different tiers for corporate tax and super deductions and all these types of things. Okay, and ultimately HMRC want every penny. They're broke, so I think they even announced £100 million to try and chase up tax and collect taxes and all these types of things. So the key here for any business owner really is to keep your finances well organized, and then ultimately engage with people like ourselves, where we can help most people on most fronts. And it's getting organized in advance, not later on. It's getting the right team to help you at the right time. Okay, so we'd be delighted to help if we can help. Okay, so a couple of more questions here. Let me just go through this. Hold on. So hold on, there's a few more questions coming in. So if we're considering a new practice, which is 50-50 private or NHS, is it worth going down the limited route? Is it even possible with the NHS? Just building on the last question. So I think it would be down. If you're doing a new practice, of course you can do it with a limited company. Obviously, if you've got a contract, you need to figure out how that contract has to be transferred into the company, but it's feasible. Okay, can we go through the partnership route on acquisition? So yeah, I'd say a company is the right route. If you're setting up a squat and buying new equipment, does the super deduction, does it apply for super deduction? Yeah, it would do. Okay, you're buying new equipment. The key thing is you're buying new equipment, so that would ultimately help. Okay, so it's important you claim those allowances, and buying new plant and machinery would qualify. And then the last question. Oh yeah, a question I've got. Can we, regarding the event on Saturday, for people who are working on Saturday, because I appreciate some people are working. We've got quite a few people who booked it, but they can't see it at the time. So you can actually book your space, and then a recording will be sent via to your inbox after the event. So, and that you just need to book yourself online on the event, and you'll get it that way. Okay, so in a nutshell, yeah, I've been talking almost 40 minutes now. Sorry, still getting questions, so I haven't put everybody to sleep, which is a good sign. So thank you very much. Okay, leave with this phrase from Eleanor Roosevelt: "The future belongs to those who believe in the beauty of their dreams." It's so true, and despite all the uncertainty, despite all the kind of challenges that may well be out there, okay, and despite the economic environment where we're not sure what's going to happen next, okay, I think if you organise yourself, you plan yourselves out properly, it'll be okay. It'll be okay. So if you need any help, get in touch, and we'll be delighted to help. So thank you very much for attending this webinar this evening. I hope you got some useful information out of it. And if you need further information, don't hesitate to reach out to myself or my team. Okay. All the best. Okay. Thank you. Bye-bye.
Thanks for listening in to the Dental Business Guide podcast. We welcome your feedback, and if you're enjoying it, please let your friends know too. Until the next time on the Dental Business Guide podcast.